And the collapse of Silicon Valley Bank fueling a partisan blame game. The White House faulting Republicans for rolling back financial regulations in 2018. Charlie Gasparino reacting last hour.
I think the White House is spinning this idiotically in many cases, trying to blame a tweak in Dodd-Frank for excessive risk-taking that, bank examiners would have found anyway if they were looking. And they are looking at Silicon Valley Bank.
Joining us now is Kevin O'Leary, chairman of O'Leary Ventures. It's wonderful to have you on the program today. Wish the topic was a little bit sunnier. What's your take this morning on how the White House and the Fed are going to move forward now that we have the answer from yesterday? Hold on, we're checking his.
Hang on 1 second, Mr. Wonderful. TV works better with a microphone. All right, we're going to fix that. As we wait on that, let's go ahead and we got him. Yeah. Soundbite number 4, guys. This is how Steve Forbes sees the bottom line for this call on the bank in California and the one in New York.
Earlier last week, they could have saved that bank if that CEO hadn't looked like a deer in the headlights and gone to a Buffett, gone to a Morgan, gone to a VC and said, we have a short-term cash problem. That bank could have been saved. That's the real crime. The management didn't save a bank that was eminently savable.
I think we got you back now. Kev, good morning.
Good morning.
Thank you for joining us on our broadcast today. You say the federal government and Joe Biden nationalized the banking system with their move this week. Explain that.
Yes, it's exactly what happened. Well, think about it in very simple terms. It doesn't matter how good or bad of bank managers you are going forward. And let's take the case of Silicon Valley Bank. That was not the Fed's fault. That was not regulatory issues. It was just plain, straight, idiot management underneath an incompetent board. I hate to put it that way, but those are the facts. And so at the end of the day, you can't protect yourself against idiot management in any sector, including banking. There's always a black swan swimming around in the lake somewhere, and you found it in Silicon Valley Bank. But here's where we're at this morning with this new policy. I don't care what bank we're talking about anymore. You as a depositor have no risk whatsoever. So what stops the idiot bank manager going forward from doing anything they want within the regulatory environment, taking as much risk as possible to get the stock price of that bank up? That's how they're compensated. This is going to create some very perverse acts by bank managers and crazy behaviors. And in the end, it's not a long-term solution whatsoever, because either you decide to nationalize the banks, in which case all of bank managers work for taxpayers as employees, just like giant utilities, or you let the private sector be the private sector. And within that, you have collapses by idiot managers like the Silicon Valley Bank, which, by the way, at the end of the day would have only cost depositors around 5%. Those that were uninsured above $250,000. And frankly, the people that have money more than $250,000 are the sophisticated investors. They can take the hit. We shouldn't have done this, and now we have the moral jeopardy ahead of us of idiot bank managers everywhere doing crazy behavior.
So do you think that that realization will cause anyone in D.C. to try to roll back what they decided to do?
It's happening as we speak. This is becoming very politicized. I think the unintended consequences of creating a nationalized, no-risk banking system is starting to sink in the last 24 hours. And this debate is going to rage and undoubtedly become a political issue. And frankly, it makes me very uncomfortable. I understand the importance of having confidence in the banking system. Everybody does. But the way you've got to look at this is different than any other sector of the economy. We have 11 sectors in the economy. Financial services is one of them. It services all other 10. It's unique in that respect. So if we're going to nationalize it, let's nationalize it. But whatever happens going forward, all banks are going to be under way more scrutiny, far less profitable. And I don't think this really saves the small regional bank long term. Do people really want to risk their money there, or are they slowly going to migrate to much larger institutions that are even more highly regulated? We got a lot of problems as a result of this policy. I know it was a knee-jerk reaction, but now the reality sinks in. And again, I ask everybody, if the bank manager has nothing at risk, and is backed up by the Fed, what stops them from doing whatever they like.
It's no longer a private system in that sense, as you have said as well. Jerry Baker, the tide goes out. Silicon Valley Bank already drowned. A playoff of Warren Buffett's favorite line about, you know who's wearing pants when the tide goes out. On inflation, we got the number out. It remains stubbornly high. The White House put out a statement just about 10 minutes ago. Here's the headline. Today's report shows annual inflation is down by a third from the summer as unemployment rate remains around a 50-year low. What is the effect of inflation today and going forward, and maybe what the Fed does? Stocks are popping right now, up 350. Investors think they're not going to raise rates. What about the consumer trying to battle this inflation every day?
Well, I think we have a 50-50 on the Fed pausing but not stopping. I wouldn't bet that they're going to stop anytime soon. They could do what the Bank of England did and just pause for a short period, but I doubt it. I think we're going to get 25 basis points because inflation actually was still out there. It's still a factor, and it's certainly causing food and protein prices to continue to move north. And so I think they're going to say, no, we can't stop now. We did have that banking issue. And remember, this whole thing about Silicon Valley Bank was around payroll. If you remember the narrative Sunday night, every bank was talking about the fact that anything banking at Silicon Valley Bank or Signature Bank couldn't make payroll. Well, everybody's forgotten that the federal government has already set aside billions of dollars that most of these businesses have never reclaimed in the employment retention credit, which is still active for another 23 months. So all of a sudden, and certainly in my portfolio, every single company today is saying, well, wait a minute. What about this payroll credit? Everybody's going after it, and I'm going to become a huge advocate for it, too, because that's an existing program that already exists. No question about it. And I think now, going forward, our new policy, and everybody in the Valley is talking about this, we are no longer letting our portfolio companies keep all of their cash in one institution. In our portfolio, as of Monday morning, we've diversified to 5 separate banks. So 20% is the max you can put of liquid assets at any one institution.
Smart. All right. Kevin O'Leary, thank you for being with us today. It's great to have you on the show.
Take care.
I'm Steve Ducey.
I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.